Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest-growing regulated all-in-one trading and investing app. Whether you're looking to invest in U.S. stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code Blockchain DXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and FinTech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and FinTech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbor. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and FinTech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbor. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the detail are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Welcome to the Deep Dive. Today we're jumping right into, well, two incredibly fast-moving worlds: artificial intelligence and cryptocurrencies. Things are just shifting constantly, aren't they? Policies, tech, it's hard to keep track.
It really is. What's cutting edge one week feels almost dated the next. Both the technology and, the rules around it are evolving at just breakneck speed.
Absolutely. So our mission today is to cut through all that noise. We want to distill the really important stuff, the latest developments, give you the key insights, basically help you get a quick handle on what's really driving the conversation right now in these, let's face it, pretty complex areas.
Yeah, exactly. We've pulled together quite a mix. We've got updates on U.S. policy for AI, some new crypto legislation proposals that are pretty interesting, also some really surprising ways companies are using crypto in their treasuries, and some cutting-edge stuff on tokenization.
And we'll also touch on the global crypto market snapshot, right? And what's happening in the Middle East with AI and blockchain.
That's right. Dubai, Saudi Arabia, they're making significant moves. So yeah, it's a lot to get through, but we'll aim to make it, clear and hopefully pretty compelling.
Okay, let's dive in. First up, some big news from, well, just today, July 24th, 2025. President Trump's new executive order launching something called the American AI Exports Program. What's the core idea here? What are they trying to achieve?
Well, the main goal seems to be pretty clear. That the U.S. wants to really cement its leadership in the global AI race. And it's not just about boosting things at home. The program explicitly talks about exporting full-stack USA technology packages worldwide.
Full stack. Okay, what does that actually mean in this AI context? Hardware, Software.
It means the whole package. So you're talking the AI hardware itself, the data systems needed, the actual AI models, and then the broader programs built on top of that. The insight, I think, is that they're not just selling software. They want to export the entire integrated solution. And selected projects get help, right? Federal financing, loans, tech support, all run by Commerce Secretary Howard Lutnick's group.
Okay, that makes sense. But what really jumps out is this stated aim to make AI completely apolitical. I mean, can AI be completely apolitical? What's behind that specific focus?
That's a really interesting and maybe contentious point. The stated worry is that current AI, like ChatGPT, pulls too much information from what they call left-leaning media. So the program's goal is to ensure the AI it promotes doesn't have any perceived political slant. But, the deeper insight here might be geopolitical. It's about controlling the narrative, preventing data bias being used against U.S. interests, maybe countering claims that current AI reflects certain ideologies. It's positioning as much as anything.
It definitely sounds strategic, and it makes you think of Elon Musk, right? With Grok and X, he's been banging the drum about open source AI precisely so people can check for political bias.
Exactly. His whole push for open source is about that public scrutiny. And yeah, his departure from OpenAI was reportedly linked to concerns they were moving away from that open mission, becoming more commercial, less transparent.
So for our listeners, what are the big takeaways here? What does a national, quote-unquote, apolitical AI strategy mean?
Well, it could really change the game, couldn't it? It impacts how AI develops globally, U.S. competitiveness. Think about data sovereignty, influence. It's definitely something to watch closely.
Okay, so that's the AI side, pushing for a certain kind of control. Now, shifting gears to crypto, we're seeing a similar, maybe even more intense push for clarity and structure there, right? We just saw the Genius Act signed into law last week, plus talk about the Clarity Act, the Anti-CBDC Act. What's the context for all this activity now?
Right. It feels like a real acceleration in trying to define the space. The Genius Act is about consumer protection. Clarity Act tries to sort out what's a security versus a commodity. And the Anti-CBDC Act is, well, pretty self-explanatory, a push against a U.S. digital dollar. They're all pieces of a bigger puzzle. But the really new interesting bit is this discussion draft from Senate Republicans on digital asset market structure legislation.
And I heard it's short.
Yeah.
Which is unusual for legislation.
Yeah. It is. Only 35 pages. Which, compared to the 1,000-plus page bills we sometimes see, that itself tells you something. It feels more targeted.
Okay, so what's in this shorter targeted draft? What are the key bits?
The headline provision seems to be allowing issuers to raise up to $75 million a year for 4 years. But, and this is the crucial part, only if the tokens have security-like features, things like equity, debt, or revenue rights. And here's the kicker. These qualified tokens would be overseen by the CFTC.
Not the SEC.
Not the SEC. The Commodity Futures Trading Commission. That's a potentially huge jurisdictional shift.
Wow, okay. What are the ripple effects of that likely to be?
Well, you could definitely see a comeback for ICOs, right? Initial coin offerings, but maybe in a more structured way. The insight here is it looks like an attempt to balance innovation, letting projects raise funds with investor protection and really clear AML rules, anti-money laundering stuff. And, it also happens to align with President Trump's past comments about preferring CFTC oversight over the SEC for certain assets.
So for anyone listening who's building in crypto or just interested in how projects get funded, this sounds like pretty important news.
Oh, absolutely. It could really change the landscape for funding and give much-needed regulatory clarity, or at least a clearer path. Definitely something to keep an eye on.
That regulatory piece is crucial. Meanwhile, though, companies aren't waiting. They're already making some really bold moves using crypto in their treasury strategies. Let's pivot to that.
Yeah, this trend is really picking up steam. Take Mia Pharma, a pharmaceutical company, right? They just put $100 million into a Litecoin treasury firm.
Litecoin. Okay, that's interesting.
It is. And get this. It makes Mia Pharma the first and only publicly traded company holding Litecoin on a national exchange. And the really fascinating insight, Charlie Lee, Litecoin's founder, is the lead investor, and he's actually joined Mia Pharma's board.
Wow. Okay, because Litecoin has always been seen as, Bitcoin's sort of younger sibling, a testbed almost. And Charlie Lee himself had kind of stepped back from the project, hadn't he?
Largely, yes. So him jumping back in this way, leading this investment, joining the board, it's definitely notable. It signals, perhaps, a renewed focus or belief in Litecoin's role, maybe specifically in this treasury context.
Interesting. Okay, so that's Litecoin. What about Bitcoin treasuries?
Well, on that front, you've got Mara Holdings. They're planning to raise a massive $850 million. And their plan? Buy Bitcoin for the treasury. And crucially, their stated strategy is no selling at all. Just pure HODL, hold on for dear life. It's a real long-term conviction play.
So what's behind this whole treasury hype then? Is it just about inflation, hedging against fiat currencies, or is there more to it?
Inflation hedging is definitely a big part of it, yeah. Protecting assets from losing value in the traditional system. But the nuance, I think, is who is using what. Bitcoin, with its volatility but scarcity, seems appealing for those really big companies, the trillion-dollar, billion-dollar players. But for smaller companies, especially maybe in countries with really high inflation, stablecoins might actually make more practical sense. Less upside, maybe, but much less volatility day to day.
Makes sense. But there are huge risks too, surely. The price swings alone.
Oh, absolutely. Extreme volatility is risk number one. Then you've got geopolitical stuff. What if U.S. policy flips dramatically after 2028? And of course, security. Hacks are always a threat when you're holding large amounts of crypto.
And didn't you mention something even more surprising, like meme coins in treasuries?
Yeah, it sounds a bit wild, but there was a report about a company holding something like $500 billion worth of Dogecoin in its treasury. Now, whether that's sustainable or, frankly, sensible long-term, that's a huge question mark. But it shows how far some are willing to push the boundaries. So for you listening, the thing that stands out is this tension, right? The potential for huge gains versus these really significant inherent risks. It forces a rethink of traditional treasury management.
A massive rethink. Okay, let's shift again. Another area, quietly but maybe profoundly changing finance, is tokenization. What's the latest there?
This is really foundational stuff. We're seeing major players move in. Goldman Sachs and BNY Mellon are working together on a tokenized money market fund product. MMFs, traditionally super safe places to park cash, earn a bit of interest.
Right. So how does tokenizing an MMF actually change things?
Well, Goldman's using blockchain to represent shares in these funds as digital tokens. The key insight here is efficiency and liquidity. These tokens can be moved around, used as collateral much, much faster and easier than the old systems allow. And it's not just them. BlackRock, Fidelity, Federated Hermes, these are huge names getting involved. It signals a real industry shift towards this technology.
And Robinhood's looking at tokenized stocks too, digital versions of actual shares.
That's the report, yes. Basically, making U.S. stocks easier to access globally, potentially cutting out some middlemen and delays. The main hurdle there, though, is still a bit of regulatory fog. How are these digital shares treated legally, especially across borders? That needs more clarity.
Okay, so with all this activity, it seems a bit surprising then that the total value locked to the TVL for real-world assets has actually dipped slightly. It's at $2.25 billion now, down a bit after staying pretty flat for months. What's going on there?
Yeah, it's an interesting data point. If you connect it to the bigger picture, these tokenization projects are clearly aiming to revolutionize finance, make things more efficient, more accessible. That slight dip in RWA TVL, it could just be market noise, a temporary blip, or maybe it just reflects that we're still in the very early stages of building this infrastructure. The insight, I think, is not to focus too much on the short-term TVL figure, but on the fact that the foundational work is happening now. The potential for massive growth later is definitely there as more traditional assets get tokenized.
Right, building the rails for the future. Okay, let's zoom out now and get that global crypto market snapshot. What are the headline numbers as of today, July 24th?
Okay, so the overall global crypto market cap is sitting at $3.96 trillion. That's actually down about 6.16% in the last 24 hours. But trading volume is huge, a staggering $234 billion. So lots of activity even with the price dip.
And ETF inflows.
Yeah.
Seeing about $10.5 million there. Though, as always, need to take those numbers with a slight pinch of salt, right? Data from places like DFRA isn't always perfectly real time.
Exactly. But what is looking healthy is the stablecoin volume. Tether USDT is at $140.77 billion, Circle's USDC at $16.80 billion, FUSD at $10.55 billion. That suggests, people aren't necessarily cashing out completely despite the market dip. They're parking funds in stable assets, maybe waiting to see what happens next. It's a cautious but not panic sign.
Interesting. And decentralized exchanges, DEXs, how are they looking?
Their volume actually picked up pace, hitting $24.06 billion. Total fees around $105 million. Now, that could mean more selling pressure driving volume, given the price drops. But overall, the metrics aren't looking too bad considering.
Any predictions based on this? I know, not financial advice.
Haha. Definitely not financial advice. But purely looking at the technicals, the stablecoin levels, there's arguably a very high possibility we could see prices for Bitcoin and crypto pump up a bit over the weekend. But again, who knows? Do your own research.
Always good advice. Okay, let's quickly run through some key coin metrics. Bitcoin.
Bitcoin's at $119,121. Down just slightly, 0.41% in 24 hours, but basically flat, up 0.04% over 7 days. Its dominance, though, has picked up back to 61.01%. Market cap, $2.36 trillion.
Ethereum. That had a huge run lately.
It did. Currently $3,646, down 2.41% today, but still up an incredible, wait for it, 750% over 7 days.
750%.
Yep. Its dominance is also up 11.30%. Market cap now $440 billion. Remember, it was under $300 billion just over 3 weeks ago.
What drove that massive jump?
It's largely what people are calling the Ethereum treasury and validator narratives, basically growing interest in staking ETH for yield, plus this idea of a decentralized network treasury. It's pulling in a lot of investment as people bet on the network's future growth and governance model.
Okay. And Ripple XRP, how's that faring?
XRP took the biggest hit in the last 24 hours, down 8.53% to about $0.32. Still up nearly 5% over the week, though. And one other really key number, total value locked across all DeFi protocols is now $137.05 billion.
Wow. $137 billion. How does that compare historically?
It's massive. Think back to 2023. We were talking maybe $30 to $40 billion. So it just shows the huge sustained growth in the DeFi space overall.
And real quick, top DXs and chains by volume.
Top DXs right now. PancakeSwap, $7.87 Bs. Then Uniswap, $4.24 Bs. Radium, $1.26 Bs. Orca, $1.10 Bs. Zerodrome, 776 cents. And top chains for DEX volume, Binance Smart Chain leading $8.02 Bs. Then Solana, $4.50, and Ethereum, $3.45 Bs. So yeah, it's a really dynamic picture. The insight for you listening is just seeing how much activity and value is flowing through these decentralized systems, even when headline prices fluctuate day to day. The underlying growth is pretty undeniable.
Absolutely. Okay, to wrap things up today, let's look east. Two really significant developments coming out of the Middle East showing how much influence they're gaining in AI and crypto.
Definitely. First, there's Hotate Corporation's subsidiary. They've just secured a commercial license in the Dubai International Finance Center, the DFC. This is for their advancing capital strategy. What it means practically is they can now deploy their Bitcoin reserves into structured derivative strategies. Think options, futures, that kind of thing.
And why is that significant?
It gives them much broader access to big institutional players, potentially lowers their costs. And remember, Hotate made $1 billion in net proceeds just from covered call options on their Bitcoin last fiscal year. Getting this license in the DFC, which has that respected common law framework, just makes it easier and more attractive for institutions to deal with them. It really highlights Dubai's strategy to integrate digital assets seriously.
A very proactive approach from Dubai.
Yeah.
Okay, the second development. Saudi Arabia and AI.
Right. Saudi Arabia is launching a major initiative to actually measure AI readiness across its entire government. It's led by their Saudi Data for Artificial Intelligence Authority, SDAIA, and they've launched a national AI index.
A national AI index. What's the goal there?
It's designed as a strategic tool. They had 180 government representatives involved in the first round. It monitors progress constantly, provides recommendations to speed up AI development, and it's all explicitly tied into their big Saudi Vision 2030 plan. SDIIA is basically overseeing everything data and AI related in the kingdom, the real insight. They're not just talking about AI, they're systematically measuring their progress, optimizing their approach. It's about building national capacity in a very deliberate way.
That's a really structured, data-driven way to go about it. So, looking at these moves in Dubai and Saudi Arabia, how might they shake up the global picture for AI and crypto? Any lessons for other regions?
Well, today we've really covered a lot, haven't we? We saw the U.S. aiming for this apolitical AI leadership, new crypto rules trying to balance innovation and protection, companies boldly using crypto and treasuries, plus that quiet revolution of tokenization and finance, and now these really strategic plays from Dubai and Saudi Arabia and blockchain and AI. The big takeaway is just how fast everything is moving and converging.
It really is. So maybe a final thought to leave everyone with. Think about this convergence. You've got governments pushing for national AI strategies, maybe trying to control the narrative, make AI apolitical. Yeah. At the same time, you have companies embracing these volatile, decentralized cryptocurrencies for their core finances. How might these two powerful, maybe even conflicting forces reshape what we mean by trust, that control, in both tech and finance? What kind of future starts to emerge? And, who actually gets to define the rules, the ethical rules, the economic rules in that future landscape? Something to chew on.